What if I could told you could shave off hundreds off your mortgage payment without waiting for rates to drop or winning the lottery? Yep, that's real, and it's called a mortgage buy down. Now, if you're a first time buyer or someone just trying to figure out how to navigate this crazy housing market, you're at the right place, the right channel. I'm Coach Clarence, mortgage advisor, mindset coach, and I'm the guy who keeps it real when it comes to your money and your future. So, what I'm going to do is I'm going to break down complicated real estate stuff in a way that makes sense so that you can make smart moves, not emotional ones. If you're with me so far, make sure you hit that like button. If you want more videos that actually help, not just hype, make sure you subscribe to this channel so you don't miss any gems that drop, and that saves you thousands of dollars. And let's beat that algorithm together. It only works if you work it. Hey gang, what if I told you could lower your mortgage payment by hundreds of dollars a month without waiting for interest rates to drop? You'd say, hey, that sounds good, Clarence. Well, here's what I got for you. It's called a mortgage buy down. And today I'm going to break it down so you can use it to your advantage and start saving, getting the home buying game. Let's face it, we're in some uncertain times. A lot of you first-time home buyers are afraid to get off the fence. You find a home you love, you do the math, and then realize the monthly payment hits harder than that first workout after you've been out of the gym for a while. It can be very discouraging, and for many folks, it feels like the market has locked them out. You know, you've been saving, you're doing everything right, but that high payment, it keeps pushing your dreams further and further down the road. Worse, you're stuck on the sideline watching inventory go up or go down, appreciation go up, and you wonder if you're actually ever going to make your move. This is where the buy down comes in. The mortgage buy down is a simple but powerful tool that allows you to temporarily reduce your interest rate, and that means lower payments in those crucial early years when you're just getting started. For example, a 2-1 buy down drops your rate by 2% in year one and 1% in year two, and then settles into your locked rate after that. It gives you a lot of breathing room, more monthly cash flow, and a strategic window to refinance when rates improve. So it's kind of simple, but it may be complicated, but let me explain further. Let's say you're buying a $300,000 house at 6.5% interest rate with a 2-1 buy down. Your first rate drops to 4.5%. That's saving you over $370 a month. That's $4,400 in your pocket. Now, that's not small change. That's a financial strategy. That money can be invested, or you could do a principal reduction. Bottom line is you have options. Now, here's the part most people miss. You don't always have to pay for the buy down yourself. In fact, sellers or builders often offer it as an incentive, especially in slower markets where they're eager to close. And yes, some lenders will pay for it as well. Got to look around. So don't be afraid to ask your lender to get it. Don't ask, don't just be like, oh, I don't know what to do. I heard about this and that. Ask. You got to ask. Closed mouth doesn't get fed. A buy down makes sense generally when you plan to refinance in the next couple of years, you expect your income to grow, or you simply want to ease into your mortgage with some financial breathing room. It's not for everyone, but for the right buyers, it's a total game changer. Now, if this kind of strategy gets you thinking, you need to grab my first time home buyer's guide. It's loaded with real live tips, checklists, and things like this so you can walk into home ownership informed, confident, and ready to win. I'll put a link in the description. Make sure you download it, study it, and share it with a friend. Buying your first home is hard enough. Don't leave money on the table because you didn't know these options. Now, let's break down the 3 most popular buy down options and when each one might make sense for you. Number 1, the 2-1 buy down. This is a common structure. Your rate is reduced by 2% in year 1, 1% in year 2. Then it goes back to that full rate in year 3. This is perfect if you expect to refinance in 2 years or you just want lower payments while you settle into your home. Now, let's say you're locked in at 6.5 with a 2-1 buy down. You pay 4.5 in year 1, 5.5 in year 2. That can mean $300 to $400 in monthly savings right out the gate, which is huge for first-time homebuyers adjusting to new expenses. Maybe there's a baby on the scene. Next is the 1-0 buy down. This is simpler. Your rate is 1% lower for the first year, then it jumps to the full rate. Doesn't save as much upfront, but it's cheaper to negotiate and still helps you with some short-term relief, especially if you're on a budget or if the sellers won't cover a full 2-1 buy down. And finally, the big one, the 3-2-1 buy down. This is a premium option, usually when builders or sellers are very motivated. You get a 3% rate reduction in year 1, 2% in year 2, 1% in year 3. And you get the full rate in year 4. A lot of options by 4 years, right? It's a power play for someone who needs serious breathing room right now, but plans to grow into their income or refinance before the full rate kicks in. So whether it's a 1-0, 2-1, or 3-2-1, these twos aren't just gimmicks. They're strategic moves that can make home ownership more affordable, especially in high interest environments. So just to make sure, you've got to make sure you're working with someone who knows how to structure your numbers in your favor. If this helped you out a little bit, tap that like button, subscribe to the channel, and drop a comment if you want me to cover more real-world tactics like this that actually work to help buyers win in this market. Hey, I'm Coach Clarence, and I'll see you on the next one.